Check test. Alright. Getting better at this. Good morning, everybody. I doubt anybody's going to show up, but I do these way too early in the morning, I think. But that's okay. It's the time that I have available. So let's get right to it. We'll just start with the general rundown like I normally used to do with when I was doing it in written style and thread style. And as usual, we start out with the Dixie, the dollar. As you can see, we got 1, 2, 3 now. Let's zoom in a little bit. We got 1, 2, 3 green Heikenai she candles. These still show the open, high, low, and close. I still like to see those, but I just like to see the color change of the Heikenai she. The formula is good. So as far as showing trend and trend changes, better than anything I've ever found, even moving averages. But you can see I added this here, the force index, and this goes by many names. There's a lot of fancy ones out there. There's one called TDFI, and basically this tells you, this is what I call oomph, or how much strength a move has compared to, I only go back 6 periods, so 6 candles back in comparison to the past 6 candles. And then what you have to do, what's tricky about this indicator is that you have to form fit it these levels so that you know that there's a big change, there's a disturbance in the force, so to speak, when it goes outside these bands, and that's going to be different for each instrument that you look at, so you have to adjust these bands accordingly. And I'll show you a little bit about that later, a little bit more about that. So let's zoom back in. You can see before I do that, you can see here's a big move. You're outside the levels, and then boom, you have this huge move, and then it's sustained for a pretty long time. Started slowing down, and then we had the COVID. I was in this trade here. I thought we were going to go to 120, and then they just started printing money right away instead of waiting. And so we've been in this downtrend ever since COVID. Have these little pullbacks here and there, and as you can see that these are weekly candles. You have to keep this in mind. This pullback here is not even as strong as this pullback here, and if we look down at the force index, you can see we're well within the bands, that there's no real change, no disturbance in the force, so to speak. So as far as I'm concerned, we're still in a downtrend. This is just a pullback. We got our thin blue line forming back up, so that's going to be a challenge to break through. And we also have this verified support that's been tested. So this is a multi-year support. This is one time a turncoat, but I think as they continue, I just read today that Powell welcomes inflation, so that means more money printing. He's going to print more reserves to buy up more assets, so that the banks can loan against and keep you in debt, keep you in perpetual debt forever, and the rat on the treadmill that they'd like you to be, as opposed to a free man or free woman or free person. So I would see this continuing to head down and eventually breaking through this support line, but that's, could take months to do. That's not something that happens like lickety split. Sorry, I had a sip of my coffee. And I don't see any signs of a reversal here at all. Just some stagnation, a little pullback. So, and the news, when you're dealing with weekly charts, the news and the fundamentals, the underlying fundamentals become much more important than if you're a day trader. And as I said, I'm a DCA'er, buy the dipper, longer term hodler. So if this starts showing, if there's a disturbance in the force here, I'll be looking to possibly, it's not a for certain, but it's a possibility that I might drop my Bitcoin and hold dollars. But as long as dollars are dropping, I don't see any reason to keep any of my money in fiat. But I do see a little reason, because it is still the world reserve currency, and I'll get into that as well in a little bit here in the next chart. Here we go on Bitcoin. Bitcoin has its first red Heikenaishi. Yeah, we had the Elon Musk, spike up, which got us up to around 38ish, and then the pullback down, the subsequent drop back down. That was just an empty rumored spike. Elon Musk is a troll. I don't know if you guys can figure that out yet, but he just likes doing that to get his jollies off. He's not. In order for him to put his money into that type of into this type of asset, well, his personal money, he can do it anytime he wants to, but for the business, they have to do SEC filings, and all that takes months and months, especially the company as large as his. So I don't know what all the fuss is about with Elon and the obsession behind him. I mean, he's a smart guy, don't get me wrong, but he is a troll. He's a human being, and he's quite the troll. So it's another reason why I trade the weekly charts, so that I can see what's happening. And if you had been following me any time, you would know that I bought in right here on this candle. This is where I put my initial capital in. I put a big chunk of change. Well, relative to my income, it was a big chunk of change. And I kept just DCAing from here. I flipped here because I got scared here on this candle here. This was some type of election scare. And then tried to, when we hit 10,000, we hit back into 10,000, 11,000, I jumped back in. And we were off to the races. But I'd been DCAing all these weeks, buying dips and DCAing, until I saw this. I seen this spike and a drop, and then this big wick down, and then another spike up, but not as high. And I told you guys one of the things I looked for. If you looked in my exit video, this was one of the things I looked for, was a tweezer top. And corresponding with this tweezer bottom. This is where I got that idea from, is from this tweezer bottom. This is the COVID bottom. And it's just interesting to note how everybody thought this was such a big drop here. This $5,000 drop right here. And then these are $5,000 weekly candles just all over the map. So, and how freaked out everybody was, but now how calm everybody was in this situation. Now we still got quite a bit, but it's nested now. We have a daily that formed up here as well. I'll show you that in a minute. So we have a lot of nested demand here, but as I have said in the past, stacked demand is stronger than nested demand. And as you can see, there's nothing all the way down to 20,000. There's literally nothing here. There's a small amount here. I think I marked this area out here. It shows up on the daily. But there's literally nothing all the way down to 20,000. So that's something to keep in mind. And what I did was, all the money that I had entered, including my big chunk of change here, I pulled out just the capital that I put in. And that's all sitting into a side in a strong interest-bearing account, not sitting in a crappy banky savings account. It's in my Celsius account, earning 10% compounding weekly. So it's going to outpace inflation, at least I hope. And so I mean, not real inflation, but CPI inflation. But I digress. So that's where I pulled out. I pulled out right about here. It was when I saw the lower high forming up on the daily. We looked here in the daily. This lower high pulled up here. It was right around here somewhere. This is where I actually pulled all my capital, all my seed money out. And so now everything else is just gravy. It was around 37,000. So not too bad. It's a good place to exit. So what it looks like so far. Now this is starting to look like accumulation, reaccumulation to be fair. But as I said, you know, look here. This is nested demand, and we have a daily demand that just popped up here. So that's good. That's a good sign. That spike created this daily demand here. So that's a good sign, but it's all nested. That's not as strong as stacked down here, where all this stacked demand begins. And all we have here is this little bounce area here, this little base rally. That's where I got this level. So if this nested breaks, which so far so good, it hasn't. I mean, the top one did, the one that was up here. We ground that out with all that FUD that happened with the double spin news. But all this mess here, this nested demand here, it needs to hold. Otherwise, we are coming back down. We're going to bounce here, and then eventually find some support in this area where the stack demand begins. So that's just something to keep in mind. It's not saying that that's going to happen. That's just something that you need to watch out for. So moving on to Ethereum and what's going on with this guy here. I admit I haven't been following Ethereum all that much. My focus has been on Bitcoin, pulling out my seed capital and restarting my DCA. Oh, I forgot to tell you that. I'm restarting my DCA in my Bitcoin. So I'm still adding to my positions, just dollar cost averaging in and buying dips again. And we'll see where that goes. But as far as my initial seed capital, that's off to the side collecting interest. And it's well over 6 months worth of savings for me in case I lose my job, lose my day job. That's my insurance money. Sits there boring, collecting 10% interest, compounding. That's doing better than any bank. So that's the reason. That's the other reason why I did that is to have that, you know, my rainy day fund, so I don't have to dip into my Bitcoin fund now. And so now that pressure's off for me to psychologically for me, so that I won't dip into my Bitcoin account now that I know that I have that savings. It gives me peace of mind that I can continue to DCA and buy the dip. So just something to think about. That's just how I do things, and that's my risk tolerance. You know, call me pussy, call me, you know, weak hands, whatever. The truth is now my hands become much stronger because I have that peace of mind knowing that those dollars are there for me in case I lose my day gig. So, and then I can continue to, you know, I mean, I got a very high demand job, so I'm not too worried. I probably get a job the next day, but in case that does happen, something serious happen, that money's there. Then that's what it's there for, and it's not, you know, it's in a low risk account. Moving on to ETH. So I can start focusing more on other altcoins and shitcoins too. And looking at ETH, it's kind of showing the same thing, but it's still got a lot of more upward trend than what Bitcoin has. It's testing this resistance here. You can see that it keeps bouncing back. This is the weekly chart. Let's see if we can zoom in a little bit more. You can see that this is we're getting still a lot of buying pressure, so there's not a lot of ETH out there. Um, so it is showing some signs that it could still break free, break out. It is leading the market, and I think that there is a supply shock going on there. It's a stronger supply shock than what's happening with Bitcoin right now. So I don't see any signs of a reversal, just a lot of resistance, a lot of dumping at that, probably some fear dumping at that level. But I don't see it backing off anytime. Slowing down a little bit. We are seeing a little bit of slowdown as far as the momentum. I'll get into that a little bit too, how I judge slowdowns in momentum without indicators, or divergence as they're often called. NASDAQ, it took a big dump this week, but still a green Heikeneishi, so just looks like a pretty natural pullback to this. You got a lot of nested demand here, so it's probably going to bounce off of this level. I would suggest. I would say looks like it's going to bounce off this level. You got three, four, looks like five nested demand zones inside this daily demand, or supply turn demand. So this is a turncoat, so this is pretty strong. The first test of a turncoat is usually very strong. So I suspect that this is just a healthy correction, and being pulled back in the next week or two. This is gold, just still flagging out. It looks like it's starting to reaccumulate. We got a higher low here. We're still getting lower highs. We haven't got a higher high yet, but we do have a higher low. So that's a change in momentum. So something to keep an eye on. It definitely looks like it's starting to. This looks like redistribution at first, especially when you get these big, long, wacky wicks after a big pull up. You get these wacky wicks. That's distribution, but it's still now it's starting to look more like reaccumulation, quiet reaccumulation. It's the beginnings of quiet reaccumulation with this lower low forming, or higher low forming. Silver, same thing. We're getting some quiet accumulation until you had wacky distribution here, and then it looks like not so quiet accumulation. I think it went up all the way up to 27, and got a lot of supply to get through. You got the thin red line here, and some nested supply. You got a daily, and so, but not as bad as what gold looks like. Gold is several dailies and several nested supplies to bust through. This doesn't have nearly as much, so I suspect that this is going to go. This is starting to with the Green New Deal, and I think that the solar industry is really going to take off again. So I don't want to get into that debate, but it makes me sick to my stomach that the people that are oil freaks or whatever, they're all or nothing. Oh, it takes this much energy to make a windmill. Oh, they use coal to power cars. It's a gradual, progressive change over to cleaner fuels, and I don't know how to describe it. I know that people have this black and white thinking, and they don't think in terms of spectrums or cost benefits analysis or minimizing and maximizing. That's calculus work, and they can't be bothered with higher mathematics. So it's all true or false test. They could pass maybe a true or false test because everything's a false dichotomy to them. There's no spectrum of answers. It's either this or that, this or that. I'm a dummy. I don't know anything except this or that. That there's no gray. black and white, black and white. There's plenty of shades of gray. So shut the fuck up. But I digress. Move on to oil. Speaking of oil, we need oil, no question about it. I'm not so naive as to turn off the spigot, but the infrastructure for oil is so dug in deep over the past century and a half that that's what makes other technologies difficult to implement, because of the monopoly oil has. And not just because of oil, but because of gasoline, plastics, all the things that all the byproducts that we make from oil. And to turn away from that into more cleaner energy is going to take some time, and it's going to take some balance to be able to wean off, and not just cold turkey. Oh, hey, we gotta your solar panel, it takes oil to make it with no shit. Shut the fuck up. It's a process, you stupid fuck. Just shut the fuck up. But anyway, there's oil. It's the more green Heikeneishi candles. It's still trending upward. I don't follow it that much as far as the news, but I can see that it's running into some pretty heavy resistance. This is right here. This is actually, I would have drawn this pretty much this whole box. This area is going to get pretty congested here, I think, and that's what you're seeing right here, as they're balancing out the supply and demand levels. They're pretty good at coordinating that nowadays. Being able to coordinate the world's oil needs. If somebody gets greedy and fearful, that's a different story. But I think in general they're pretty good, and I think they'll get a better understanding that they need to, we're not just going to shut the spigot off. We're too dependent on it, but we can, slowly close the spigot. And that's why I'm against pipelines. You got enough pipelines, all right? Shut the fuck up. You got plenty of pipelines. You're making bazillions of dollars. Shut the fuck up. Let's get over to green energy and better, cleaner fuels. I'm starting to warm up to nuclear, but I digress. I get too political sometimes. I'm sorry. Let's go ETH Bitcoin. Zoom in here. Showing a nice week this week. We starting to break the trend a little bit. We're starting to see higher low form up, and we are starting to see a higher high form up. So that's interesting. I don't think that's what's happening though. Definitely the supply shock of Ethereum is a factor in that, but I think people are kind of just waiting for what Bitcoin's going to do. And as these SEC filings start for these corporations that do decide to put Bitcoin on their balance sheet, I think that this will reverse eventually. We're looking probably some stuff to happen beginning of February, and then really taking off in March at the end of the quarter, the start of the new quarter. I think you're really going to start seeing Bitcoin shine and outshine even Ethereum. So, just something to keep in mind. I mean, I'm not against Ethereum. I just think that Bitcoin this is going to be the year of the Bitcoin. This is Monero. Let's zoom in here a little bit. This is starting to look like wacky distribution. It's still holding its turncoat, but it's starting to look more and more like some wacky distribution, and maybe it'll turn into reaccumulation later on, but that's what it's looking like right now. This is looking like a really nasty pullback, but not a reversal yet. We have some pretty good demand here, but it's getting tapped into quickly, a little too quickly. Maybe let's go down to the daily. Let's see what we got. Let's back up a little bit so I can see it clearer. So we got, here's our big support. This is our big turncoat. We have some nested support in here. And then no stack support underneath until down here. It's looking like a healthy pullback. It's not looking like it's just a longer pullback, but it's looking healthy. It looks like this is starting to reaccumulate here, and I'll show you what I'm looking at. It's not so clear here, but I got another chart. I'll show you what I'm looking at, but this is starting to look like reaccumulation. Not sure yet, but you know, we got it, it's getting there. And XRP, this one's been in the news lately, and this is another reason why I brought up the force index, or the TDFI as often people call it. Let's zoom in here a little bit. Now, and I'm going to go over this more deeply when we get to the trading view. XRP, as I said, it's I've always looked at it as a shit pump coin, and this is you know the day after Elon Musk put Bitcoin in his bio, you know, he put XRP Nation or XRP Standard or something in his bio, replaced it with, so you know he's trolling, you know, you got to know that now, but of course everybody, you know, people need leaders because they're dumb. I talked about XRP a couple weeks ago. This is a weekly chart, and I said to look for dips down below 20. Well, we never really hit that. We got down to around 22. That was the lowest we got before this next spike. So that's interesting that it's showing a lot more activity. But this is how the force index works. Yeah, this is what I wanted to talk about here. It's the force index. So let's zoom out a little bit, and we can see, now relative to the past 6 bars on force index with a 6 look back, we get these moves. Now when dealing with the force index, it's going to be relative to the strength of the force, the disturbance of the force, and it's going to be different in each instrument. So what you have to do is you have to tune it like a guitar, and you go to force properties, and this looks like, and you look for the spikes. Here's a spike here, here's a spike here, here's some spikes down here, and depending on where you want to catch relative to this move, you know, where you want to see the spike move. So if we waited for this, we're never going to get in if we wait for this. So let's lower this a little bit. Let's lower this 2/3. So let's go down to 30,000. Let's see, that's 100,000. Let's go to 30,000. We're going to lower it little more than 2/3, and then negative 30,000 for the downside. And then we got our zero line here, and hit OK, and see, now we're catching these spikes. We're catching these little spikes here. Didn't catch this one. If you wanted to go a little bit more deeper and catch the spikes, catch the movements, and you maybe, you know, bring this number down even more. Force index, edit. Let's take it down to 10 grand. Okay, and close it. Now we're catching these little spikes here. So when we want to be accumulating is when we're down close to the zero band. So this is when you wanted to be accumulating XRP. So if you're happy with your Bitcoin stack and you want to start making a little bit of fiat, this is one way to do it. I'm going to show you another way. You want to look for these areas of accumulation, quiet accumulation, which we're running along the zero line. And this is the weekly chart. So this, you could have dollar cost average $100 a week, $100 a week, $100 a week, $100 a week, and even you didn't hit here, you didn't hit your force index here. So you continue, $100 a week, $100 a week. Here you got about $5,000, couple $1,000. Bam, 3x. 3x, easy. 3x your money. Easy peasy. And now and then you boom, you get out, you take your capital out at 2x, you let it ride. Then you let the rest ride. And then start DCAing again. And then bam. Whenever you 2x your DCA total, pull it out. And then continue. So if you want to make money, that's one way to do it. This is what I'm actually doing this with Bitcoin on a bigger scale, but you could do this with any of these cryptocurrencies. It's just finding those quiet areas of accumulation. So just something to keep in mind. Tesla took a dump this week. Guess that's why he was angry. Maybe he wants to get Bitcoin because his stock's taking a dive. Who knows? You know, he's the one that's dragging down all the markets. You know, I think a lot of this has to do with the fear of the Wall Street bets. People are dumb, so they start panicking for no apparent reason, and they put their money into safe haven assets like gold, like silver, like Bitcoin is slowly becoming a safe haven asset as people wake up to it. It's not there yet. Contrary to popular belief, it's not there yet. And Peter Schiff is right in that aspect, that it's not there, but it's not there yet, Peter. So shut the fuck up. So as more and more people add it to their balance sheet, it's going to become stronger and stronger as the diamond hands hold. I think I was going to say something else about this. I don't remember. All right, moving on. This is Litecoin Bitcoin, the ratio. And this was a good example of divergence. This is the weekly chart. And I've been watching this. And this is an example of hidden bearish or hidden bullish divergence. And how I look at it without indicators. I set up a trend line. This is the proper use of trend lines. You know, I know that people that know nonsense, if you trend lines suck, you know, they're part of that crowd that's, you know, black and white, you know, binary thinking. They don't think in terms of you know, shades of gray and what trend lines are useful for. And they're useful for finding areas where momentum is slowing, or divergence is what they call it. And if you use indicators, which I don't use a lot of indicators. There's some that I like that are good, but most of the time I'm using price action, support resistance, and supply and demand levels, and sometimes I'll throw up an indicator if one that I like the force index. So I drew in a trend line here. It's just general. You're not looking for specific. You're just looking for, you know, areas of interest where it looks like you formed a lower high, or a lower low, or higher high, or higher low, you know, and then you draw the trend lines in. And this trend line here, see this, I did this one because this was a pretty big drop here, but then it started leveling out. So that's where I started. It's on this low. And drew the trend line in through to the next body. So it didn't have to be perfect. And then into this body here. That's how I set the trend line up. Is I lined it up here, here, and here. 3 points make a trend line. And So what we got here is the slope. We're looking at the slope of the trend line. That's all I'm interested in, is the slope. Look at this slope and how steep it is. Okay, and then there's my third point for this trend line. So I'm going to start a new trend line here and looking for the next lower low, which was right here. So put in 2 points this time. I don't have a third point yet. Don't care about the third point. All I care about is the second point. So I set that up, and look, then I look at the slope. Look at the slope of the trend line. It's not as steep as this slope. So what does that mean? It means the momentum is slowing down. That it's not going down, it's still going down, but just not as fast. That means it's a momentum change. Now that doesn't mean that it can't speed back up, but this is the proper use of trend lines. Yeah, so just want to make that clear that people, oh, trend lines are bad, the no nonsense crowd. They don't understand what trend lines are used for. They're used for divergence and momentum plays. They're not used to look for a bounce off of, although sometimes they're useful. From what I'm learning, at least what I'm learning from Crown's Crypto Cave is on the stochastics, that they're pretty good. They're pretty good areas, and I'm starting to understand that he's looking at price action. He's looking at the same things I'm looking at, but he's looking at them through the lens of indicators as opposed to me using trend lines and looking at it. So it's the only difference. So just something that I've been aware of, that we are starting to see what I call a not so lower low. That means it's a momentum change and a divergence, and I know Crown likes to look for 3 stabs at it. I just start looking for confluence of possible demand zones. So here's a lot of demand starting to nest up here. So just something to be aware of and keep an eye on. I don't think Litecoin's down but not out. I still like it, and I don't. You don't stay around for 10 years and for no reason. So moving on, let's move on to I'm slowly making the change over to TradingView. The MetaTrader MT4 has better indicators than TradingView, but TradingView is there's this guy I follow, and they're upgrading a lot of stuff in TradingView, and I'm hoping that they might be able to those, particularly my supply and demand indicators, they can't make those on TradingView. It's not possible. But now from what I'm understanding of the new additions to PineScript, which is the code that they use for like the Pine editor. Here's a simple script here that you might be able to write the code for at least my subdem indicator, if not the other one. So I'm going to look back into that. I'm going to start to see if I can make friends with that guy that I follow. I'll let you know who he is in a little bit once I make contact with him and see if it's possible to do what I want to do and maybe become partners with him. He's a YouTuber like me. He's got a terrible channel like me, but maybe together we'll either make our channels doubly terrible or doubly good. I think I'm a better technical analyst than him, but he's a way better coder than me, so maybe we'll make a good team together. I don't know yet. But anyway, if you follow me last week, you know that this is the width of the Bollinger Bands. This is all I care about, is the width. I don't care about where they're at, but I just put the Bollinger Bands up there to see where they are. But when the width drops below the average, That's an accumulation, possible accumulation area. Now, that doesn't mean it's definite accumulation area. It just means it's a very possible. You have to keep in consideration price action and fundamentals behind the instrument. But this is XRP on the daily, and as you can see, you could have over the past few days, or since January 21st, so the past, oh sorry, wrong, that's January 10th, January 10th, we'd crossed below. We started into an accumulation phase on January 10th. That's when you could have started putting money in, and if you're doing daily DCAs, you could have, $10, $10, $100, $100, whatever you could afford while this is accumulating. And then bam, takes off here. So it looks like it's got a ways to go, but if you had accumulated here on the daily, every day, put in $10, $10, $10, $10, bam, 2 extra money. Pull out all this money here that you put in, that's all free money. Let it ride. Wait for it to come back down again. Then $10, $10, $10, $10 every day, every day, every day, every day. Bam! Let go. Once it takes off. Let's zoom in a little bit. So this is where you have to be careful. Is when, because just because it goes up, the Bollinger Bands expand, that doesn't mean the price is doing that. Price is dropping. So that's something you have to keep in mind. And it's better to look for these quiet, long flats. These long, this is where you want to accumulate. And ideally, you should probably do this more on the weekly chart anyway. And then you have to keep in mind relative to where you are in the longer term basis. As I said, here's a drop, but price is going up, or the bands are expanding, but price is dropping. So you want to be careful and keep that in consideration. Don't just blindly follow this with black and white eyes. You have to keep price in mind and where price is. So you've already gone here, and we're in distribution here, and then boom, we see the drop. So we're in the pump again. We're in the pump phase. And in actuality, on the weekly, we're still haven't expanded because of this pump here. This pump happened so quick. This pump happened so quick. So sometimes, if you can DCA daily, $10, $10, $10, $10, $10, as opposed to $100 a week, $10 a day, then you might be better off doing it that way. I do it week by week on Bitcoin, but I'm on the weekly chart, and like I said, when I see these flats happen, especially, what you can do is use the weekly as your exit and your daily as your entry. That's another thing that I do using DCA. So just something to keep in mind. This is what another way to look at XRP as opposed to the force index. The force index may be a little bit easier to read because it tells you when it's going up, when it's spiking up, and when it's spiking down. Because all this does is tell you that the Bollinger Bands are expanding, but they don't tell you which way price is going while they're expanding. Hopefully I made that clear. Let's see, where are we? Here's all my stuff here. Let's look at ETH. ETH is in daily, back into, this is accumulation. This is looking like reaccumulation. See, we're still getting higher lows. It's slowed down. We're seeing some but now it's picking back up again. So see, here's our trend line here, and then from here our trend line slows down, but now we got a higher low formed here, so now we got a new trend line forming. 1, 2. So let me see if I can draw that on here. I'm not as good at. Let me draw that and show you. Okay, here's your low. 1, 2. The first one's 3. The first trend line is 3, and it doesn't have to be perfect, exact. You just want to get a general view. So there's our first trend line. Let's go right there. 1, 2, 3. Yeah, I know it cuts through that. No big deal. We're just looking in for higher lows, where areas where we can see a momentum change. So here's our first trend. Here's our second. So we start from where we left off. And let me just put that there. And we only need 2 on the second. You need 3 on the first. Always need 3 on the first. Then you need 2 on the second. Okay. Now you get another higher low here. So we're starting to see momentum pick back up again. So that's a good sign. That is a bullish sign. You can see all we're measuring, all the trend lines do is measure the pressure, the upward pressure, or if we're looking at a downtrend, then you'd look at the downtrendward pressure, and you would be looking at these things right here. So let's look at this. Let's look at the downward pressure here. 1, 2, 3 for the first one. Thereabouts. And for higher lows, higher low, or lower high, higher low, or higher high, higher high, higher high, but it's not so higher compared to this first one. 1, 2, 3. So we are slowing down. We're getting pressure, selling pressure is happening here. So we only got this and this, so it's still showing as far as the top. The downward pressure for the highs, that is the showing you that there is still some selling pressure, but the buying pressure is getting stronger because the slope of this went from here and it slowed down, so the buying pressure was getting slower, and now it's picking back up. So this is a hidden bullish divergence is what this would be. So it's the proper use of trend lines. It's not used as a point of, okay, it's going to bounce. No, it's not going to bounce. We're just looking for momentum plays. Let's look at dot. Dot, I think, is taking a dive here. So it's still going back down, went back down. The Bollinger Band's dropping back down. I like to wait for this to level off before it starts looking like accumulation. That's one thing that you want to look for. You want to look for not just it crossing downward, but you want this slope to level off, to be nice and level. That's when you're in it. You're in accumulation phase. So that's just something to keep in mind right now, that this is starting to look like you got you got some downward pressure here with your slope. Your slope was here on your selling pressure. Your slope was light, and then now the selling pressure is leveling off, and now it's starting to steepen down here. That's what I'm looking at when this tells me all trend line tells me is the pressure, and I don't even have to draw them in now. I'm getting so good at it, just looking at the pressure. So now from here, let me draw it in. Let me draw it again so you can see it, so you can get an idea of what I'm doing, what I'm looking at. So let's start here. Let's start with this candle here. This is a nice spike here in pressure. And we'll go Here's your buying pressure. Oh, there's one. Here's two. Oops. And here's three. Always three for the first, then two for all the others. One, two. See, it's leveling off. That means selling pressure, downward pressure here. Now we're starting to see an actual reversal. One, and then we look. Looks like about here. You gotta kind of. It's a little bit of a guessing game when you get towards the end, get closer to the present, but we're starting to see some downward pressure here. So the slope is changing to a negative slope. So just something to keep in mind. It doesn't mean that that's going to reverse. It means that the momentum is reversing. The momentum is reversing. It doesn't mean that it can't pick back up again, because if we look at the bottom, let's look at the bottom. It's a little bit easier. Let's see, where's a good place? Let's start at the same place. 1, 2, and actually, we don't have a 3 yet. Yeah, we don't have a 3. So let's see. Let's take a look a little bit. Let's look a little bit longer. Let's take this back a little bit. This looks a little bit better. So we got our 3 points. We always want to try to get 3 points for your first to look for the momentum play. So our buying pressure is increasing because now this is steepening. Oop. On a new trend line. And we got here's number 2. So we got an increase, but now we're starting to see it squeeze together. So we got a leveling off of buying pressure and a strengthening of selling pressure. So that's not looking good for DOT for now. So the odds are improving that there will be a pullback. But that'll give you a general idea. And now you understand the proper use of trend lines. You can get a better idea. It's what they're used for. Used for momentum plays. Okay, they're not used for price. Oh, it's going to bounce off of this line. If you hear anybody ever say that it's going to bounce off a line, it's not. They don't know what the fuck they're talking about. So let's moving on. Although if it confluences with a demand zone and you have a divergence play in a demand zone, then now it's a different story. This is starting to look like reaccumulation here. Definitely. We do have the selling pressure is getting stronger. So here's your selling pressure is the top. Your selling pressure is your top trend. Your buying pressure is your bottom trend. The buying pressure is still constant. I'll show you what I'm looking at. Here's 3. Thereabout. It's general. And see, it's still continuing. It's pretty constant. Fairly constant. It's not perfect. They don't have to be perfect. You just want to get them close enough to get a general view. Here's your buying pressure. Here's your sell pressure. Here's 1, 2, 3. You only want 3 for your first one. But sell pressure is increasing. I can't get rid of that. Here we go. This is good practice for me because I'm not used to TradingView to doing this. So 1, 2. All we need is 2 for the second, and any subsequent other ones. I don't know why this keeps popping up. I don't want that there. Go away. Don't want that. Stay down there. Now, we don't have a confirmed high yet. That's too soon. It's only the next candle. I need at least another candle to confirm that this is going to be another high. So we don't know yet. What we do know is the slope, the selling pressure is increasing. That's one thing we do know, because this slope is not as strong. It's going negative. This slope is starting to drop compared to the slope of the R3. And then this is the buying pressure is pretty constant. So this looks like continuation. This definitely looks like continuation that's going to happen here. And here's, this is Tezos. We're seeing constant buying pressure, and pretty much the same thing as Link. Not as strong because the slope itself is not as strong, but it's definitely the same signature, just not as strong. Here's GFE. This looks like distribution, messy, sloppy shit, and then maybe some reaccumulation forming here. Possible right here. But this is all distribution. This is when you start seeing this wacky with wicks up and down and no real direction. That's distribution. That's people taking profit. Let's see. This is starting to look like distribution with dot. Got a lot of negative days here. We got 1, 2, 3 slope, and then nothing. Just absolute garbage. So this is looking like distribution for now, but if I start seeing like a lot more sideways action, that'd be accumulation. And then so right now that looks like distribution with some this is pretty strong buying here. So there's a pretty good demand level set up right here. So this is probably going to go sideways for a bit. And so that's what that looks like to me. So might be a good place to start accumulating. We are dropping down here. It is a good fundamentally sound. Oh, and this is Bitcoin. Oh, against Bitcoin. I thought this was against USD. So this is against Bitcoin. So, that changes things a little bit, because now the fundamentals change. I'm not so sure now, because at first I thought it was the dollar, but because it's Bitcoin, I don't know. If that changes the fundamentals. So maybe not so much. So might be alt season might start. This is showing some hints that alt season might be coming to a close. Just hints, it's not a definite. Uni, I'm still in this one. This is still I bought in. I wish I bought in more, but I actually need to look at my position. I could probably pull out my initial capital now. And let the rest ride and put that capital in something else. It's only small. I got a real small amount in there. It's not big, but this still looks like it's got This is riding up. There's no sign of it. It's saying it's leveling off, but it's no sign of it dropping back down. The Bollinger Band squeezing. No sign of it yet. Here's anchor. This has just been a messy chart. It's a good idea, good technology, but when they got that breach and had all those problems over at KuCoin, I don't know. It's looking like reaccumulation, but it's so sloppy. It's just a sloppy mess. There's no neat and order. It wasn't neat and orderly like it was back here. It's just blah 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 all over. Fed's starting to look like reaccumulation. We got our three. We are getting the buying pressure slowing. Selling pressure is strengthening, but not too bad. Here is MicroStrategy's. Pretty much going to follow what Bitcoin does. I don't have enough history on this to really give a strong. I mean, it looks like reaccumulation here. You know, and just kind of got a little too hot on that wick. All right, now getting into the GameStop and all that. Like I said, if you're hearing about it on the news, it's already too late. That's a rule that I have. It's too late to get in. If you're already hearing about it on Twitter, it's too late to get in, even on Twitter. You can see now it's just all over the map, and this is just the daily chart. How it took off within a matter of 2 weeks. Should have been in 2-3 weeks ago during the accumulation phase down here. This is like 3 weeks. It's December 18th. It's all the way back in December. We're in January, so we're a month ago. That's when you should have been in this. All this phase, and even this phase wouldn't have been bad. Right here, early January. But once we hit, when it took off right here on the 13th, it's too late. It's already too late. I mean, yeah, you probably, you had another week to get in right here, but according to this, the odds were stacked against you right here. Once this get a lot of white space in between here, you're already too late. You know, you're outside the Bollinger Bands. You get a lot of white space here. Boom. And then it soared from there, and now it's all over the map. A crazy distribution pattern. So it's already too late. So these are what you want to look for. Are we below the line? Where are we at in relation to the fundamentals? And let's look at Doge. Same thing. We were below the line back here. I think I even talked about this in a couple of weeks ago. I don't remember if it was before this spike or after this spike, but it was somewhere here, I'm pretty sure. We're looking for, I said that Doge was a good buy. You might want to start accumulating it. I'm not in this one, but I would have. It was one that I was definitely keeping my eye on and wanted to look at because it's so popular, just because of what it is, and it does have a use case. And if you'd been accumulating even after that little pop, you would have done all right. But then once you get these outside these Bollinger Bands, and then you start seeing these wacky wicks. That's distribution. People are dumping. Will it reaccumulate? I don't know. Quite frankly, I don't know. It's so crazy right now that it might become the new norm. It's got the brand recognition. If we look at it at the bigger context, on the weekly, this looks like a big pump and dump. You know, this is just dump all week. So, and we're already back underneath. We're back underneath the average. So it's looking more and more like, this is looking more like a pump and dump. Let's go back to GME for a second. I'm going to go to the weekly. Oh, that was the weekly. This was the weekly. It's still holding its own on the weekly. You might want to keep diamond hands on this one. You might want to keep diamond hands, although that wick is pretty strong. There's a lot of dumping going there. Last Friday, a lot of people dumped. So, I don't know. I'm not in it. I probably would have dumped by now, knowing that I crashed a couple hedge funds. That would have been satisfying enough for me. But I wasn't in it for here. I don't follow stocks that much. So, but I did join the group. I'm trying to learn about it. Learn about their goals. I like their philosophy and their goals. So it's like a Bitcoin dominance. Finish up. We have been trending down over the past few weeks, but still got a lot of. We tried to make a rally back, but that was that big Elon Musk spike, and then boom, back down to a previous level. We don't really look at supply and demand. We just want trend. So let's look at some trend lines in particular. Trend lines in particular are very useful for here. So let's go 1, 2, 3 for our first, and I mean, it's definitely downward pressure. We got a lot more weeks. Got 2 weeks of red here as opposed to 3 weeks, almost 4 weeks of red here. But this spike here did cause a little bit of a reversal. It looks like it's slowing down, but not. I'm not seeing a full-blown reversal. I'm just seeing a slight minutia slowing down, or just from this, just reading the candles and the wick patterns. But it's still, with this buying, the selling pressure is abruptly stopping. That's a good thing. What Heiken-Aishi's is really good at is watching where that selling pressure and buying pressure is abruptly stopping, candle per candle. But this is still a lot of sell pressure here. Still a lot of sell pressure, but you can see the closes each week. This down, 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 and then boom, almost level. So that's an abrupt turn of events. Doesn't mean that it's going to stop. It just means that it's an abrupt turn of events, and something to keep in mind about alt season. So that's about it. That's about all I have for today. I didn't want to get too much into the newbie stuff or anything like that. So hope you enjoyed it. We are going to go bye-bye. As I get better, I'll do more. Maybe if there was chats, I'm sorry I missed it. I'm not good at this yet, and I still need to. I'm not tech savvy. I'm just I'm pretty good technical analysis. So I hope the two things that I introduced today, the force index and how trend lines are actually used, were helpful to some of you guys out there. And we'll see you next week.